Hey everyone, ready to dive deep into Robinhood's Q3 2024 performance.
Let's get into it.
We've got their earnings presentation right here, dated October 30th.
Hot off the press.
Yeah, so let's break it down.
Sounds good.
Figure out what it all means for this, financial services company. They're making waves in the investing world, right?
Yeah, definitely.
Robinhood, they're known for making investing accessible. But the big question is, are they soaring high, facing some headwinds? Or are they somewhere in between?
I think it's a bit of a mixed bag, actually. They announced their second highest quarterly revenue ever.
Wow, okay.
Yeah, $637 million.
That's not bad at all.
Not bad at all. And that's a 36% jump compared to the same time last year.
36%.
Mm-hmm.
Okay, color me impressed. Especially with all the economic worries we've been hearing about.
Right. Now, here's where it gets interesting.
Okay.
Their net income, so that's the actual profit they take home, it's down a bit from the previous quarter.
Okay.
It clocked in at $150 million for Q3.
So still a profit, but maybe a sign that things are cooling down just a tiny bit.
Exactly, yeah. This is why we can't just look at, one number in isolation. It's important to look at both the long-term trends and the short-term trends, get the full picture.
Makes sense. Okay, so let's unpack those trends. Let's start with their funded customers.
Okay.
They're up to 24.3 million. So that's like a whole million more than last year at this time.
Yeah.
Where are all these new Robinhood investors coming from?
It's probably a combination of things,
Yeah.
I mean, think about it. Robinhood's been doing some pretty savvy marketing campaigns.
Yeah, true.
More and more people are getting interested in investing in general.
Right.
Maybe some are switching over from other platforms. Maybe they're drawn to the, sort of the ease of use that Robinhood offers.
That's that user-friendly kind of vibe. Okay, well, they're certainly not just window shopping because their assets under custody, the AUC, hit a record-breaking $152 billion.
Wow.
That's a 76% increase year over year.
It's huge.
It's massive.
And, it's not just new accounts.
Yeah.
Rising value of stocks, crypto holdings, that all plays a role too.
Right.
Like a rising tide lifts all boats.
Totally. So new users are signing up and they're putting their money where their mouth is. But what about those all-important net deposits? That fresh cash flowing into Robinhood. Did that keep pace?
Well, net deposits hit $10 billion for the quarter.
Solid.
But here's the catch. The annual growth rate for those deposits, it's slowing down.
Okay, so maybe a little more caution in the air. People thinking twice before they, go all in.
Yeah, possibly. Economic uncertainty can make folks a little more careful with their investments.
Right. Understandable.
Definitely something to keep an eye on.
Yeah, for sure. Okay, so lots of new faces. The AUC is looking good, but maybe a hint of hesitation out there.
Mm-hmm.
Now, here's something that really stood out to me in the report.
Okay.
Robinhood's Gold subscriber numbers.
Oh, yeah.
They're at a record high, 2.19 million. That's 9% of all their funded customers.
Wow.
Is this Gold program their secret weapon? What's the big deal with it?
Well, there are a lot of perks that come with it.
Yeah.
For one, you get 4.5% APY on any uninvested cash you have just sitting in your account.
Okay.
You get a 3% match on your IRA contributions, lower trading fees, and they've even got a credit card now.
Wow. That's a pretty tempting package, especially with interest rates being what they are these days.
Yeah, no wonder people are signing up.
Yeah. Okay, so let's follow the money trail a bit further. Where's this, impressive revenue growth coming from?
Well, transaction-based revenues are through the roof.
Okay.
Up a massive 72% year over year.
72%.
Mm-hmm.
So people are really active on the platform, huh?
Yeah, they're buying and selling.
Lots of action.
Yeah.
So is it a stock frenzy?
Mm-hmm.
Options mania? Crypto craziness? Where's the action at?
Well, equities had a strong showing. Options trading was really big.
Okay.
But surprisingly, crypto revenue is actually down from last year.
Yeah, seriously.
Yeah.
Wow. With all the buzz around digital currencies, I would have thought crypto would be through the roof.
Well, the crypto market has been pretty volatile lately.
Right.
And the regulatory landscape is still sort of, evolving, which can make people a little uncertain.
Right. It's true.
It's a sector worth watching for sure.
Yeah, for sure. So lots of action in the trading arena. Options are stealing the show. And crypto's taking a bit of a breather. What about net interest revenues? Anything noteworthy there?
Net interest revenues climbed 9% year over year. That's mostly because of the higher interest rate environment.
Makes sense. So Robinhood's making a nice profit off the cash that customers have just sitting in their accounts.
Exactly. Kind of like a bonus for them.
Yeah, not a bad one. But running a business isn't just about, raking in the dough. It's about managing costs, too.
Right.
What's the story on that front?
Well, their adjusted operating expenses are up 12% year over year, but they're still on track to meet their full-year expense projections.
So they're investing in growth, but they're keeping an eye on spending, too.
Yeah, exactly. It's a delicate balance.
It is, especially in such a fast-paced market.
Mm-hmm.
Speaking of investments, they've also got this share repurchase program going on. Returned $97 million to shareholders in Q3. What's the thinking behind that?
Well, share repurchases can send a signal that a company thinks their stock is undervalued.
Okay.
So by buying back shares, they decrease the number of shares out there, which can potentially boost earnings per share later on.
So it could be a win for investors down the line. Pretty savvy.
Absolutely.
Okay. So on top of the quarterly data, Robinhood also gave us a little peek into their September 2024 performance.
Oh, yeah.
Just like a little bonus insight.
Yeah.
What stood out to you there?
Well, monthly active users were down just a bit from August.
Okay.
But both equity and options, notional trading volumes were actually up.
Huh, interesting. So maybe a slightly smaller group of users, but they're trading more actively. That's interesting. Okay, so before we wrap up this first part of our Robinhood deep dive, let's do a quick recap. They had a strong Q3. Record revenue, AUC is looking really good. But there are some hints that things might be leveling off a bit, gaining new users. But that net deposit growth is kind of easing up. And trading activity is still robust, but crypto is showing some signs of weakness. What does it all mean? Stay tuned for part 2. We'll unpack the deeper implications of these findings and what they might signal for Robinhood's future.
Looking forward to it. Back again, digging deeper into Robinhood's Q3, and I think it really highlights how they're kind of navigating this financial landscape. It's anything but static.
Totally, yeah. It's like they're trying to hit the gas on growth, but at the same time, they're keeping an eye on the road conditions ahead, which can be pretty unpredictable.
Exactly, and their product strategy is a reflection of that, right? They're not just content with being like the stock trading app for beginners anymore. Remember those slides in the presentation, like hinting at their product roadmap? Robinhood Legend, in-days options, futures trading. It seems like they're building tools to maybe attract like more seasoned traders.
Yeah, like they're leveling up their game.
Yeah.
Going from like casual players to the pros. But yeah, no, I mean, it's a smart move, right? As their initial user base gets more comfortable, more savvy, with different investing strategies, Robinhood needs to kind of up their game to keep those users engaged.
Right, exactly. And don't forget their push to become like a bigger part of your whole financial life, not just the brokerage. Expanding into crypto, even things like a credit card. They're building this whole ecosystem, almost like aiming to be that one-stop shop for, all your money needs.
Yeah, and that gold program, it seems to be like a key piece of that puzzle, right? Bundling all those benefits together, the higher interest rates, the credit card, the trading perks, it's a pretty sweet deal. It makes you wonder, though, how sustainable is that 4.5% APY on uninvested cash?
Yeah.
Especially if, interest rates start to go down.
That's a great question, and it's one that, I'm sure is on the minds of a lot of investors. It'll be interesting to see how Robinhood manages, those gold benefits if the interest rate environment changes. Do they adjust the APY? Do they, come up with new perks to keep that value proposition strong? These are the kind of decisions that, could be really important for their success.
Totally, yeah. Another thing that really stood out to me was their international expansion plan. They specifically mentioned like the UK brokerage and the EU crypto markets. That's a bold move.
It is, and I think it really speaks to their ambition. Expanding internationally comes with, it comes with its own set of challenges, though.
Oh, for sure.
Think about it. Regulatory hurdles, cultural differences, competition from, the big players in those markets already.
Right. And figuring out how to tailor their platform, their offerings to those different customer bases. Like what works in the U.S. might not be a hit in other parts of the world.
Absolutely. It'll be interesting to see how they adapt. Can they really make investing accessible on a global scale?
Yeah, that's the question. Okay, so we've talked a lot about the positives, but let's flip the script a little bit.
Sure.
What are some of the potential red flags?
Yeah.
Areas of concern that kind of jumped out at you from the report?
Yeah, well, that slowdown in the annualized growth rate of, net deposits, that's definitely something to watch, right?
Yeah.
It suggests that, maybe that that flood of new money into Robinhood might be easing up a bit,
Mhm.
could impact their revenue growth down the line. So they're going to need to find new ways to either attract even more new users or encourage their existing users to, deposit more.
And what about those September metrics, that dip in monthly active users? Could that be a sign of trouble?
Well, it's hard to say for sure. It
Hmm.
could just be like a temporary thing, a seasonal fluctuation. But it is something to watch, especially as they're facing more and more competition from, other fintech companies. Everyone wants a piece of the pie, right?
Yeah. Customer loyalty in the digital age it's tough. It's fickle.
Yeah. It's like innovate or die, right? Kind of.
Yeah, totally. Innovate or become yesterday's news, I think is how the saying goes.
Well, I think their decision to wind down that 1% gold deposit boost program in November, that's kind of a signal of that, right? That they are constantly adapting and experimenting.
That's interesting. It seemed like a pretty generous perk. I guess it wasn't resonating with customers as much as they hoped.
Yeah. Maybe they've identified other more effective ways to incentivize those deposits and gold subscriptions. We'll have to see what they come up with next.
All right, so to kind of sum up our concerns discussion, net deposit growth is something to watch. Monthly active users dipped a little bit, and they're phasing out a key gold perk. All potential signs of a company kind of adjusting its sales a little bit.
Exactly. I think that's the lens through which we should be viewing, this whole earnings presentation. It's not just about, celebrating the wins or sounding the alarm at the first, sign of a challenge. It's about understanding the decisions they're making, the factors that are influencing those decisions, and how they're setting themselves up for the future.
And what a future could be, right?
Yeah.
I mean, they're aiming to be the go-to platform for, active traders, crypto enthusiasts, everyday investors, all while expanding globally.
It's ambitious. Whether they succeed, will depend on a lot of things. Their ability to execute on their plans, manage costs, and, navigate all those regulations.
Yeah, no, it's a lot to keep track of.
For sure.
Well, I don't know about you, but I'm definitely interested to see what the next chapter holds for Robinhood. They've definitely shaken things up in the financial world, and they're showing no signs of slowing down.
I agree. It's a company worth watching, both for how they perform financially, but also for their impact on how people think about investing, how they approach it.
Yeah, totally.
Yeah.
Well, we've covered a lot of ground in this deep dive.
Yeah.
But there's one last piece of the puzzle we need to explore. That's Robinhood's share repurchase program.
Mm-hmm.
And what it might signal about their future.
Right.
Buckle up, because we're diving into that in part 3. Okay, so we're back. Final stretch of our Robinhood deep dive. And this time, we're tearing in on their share repurchase program.
Yeah.
Remember, they spent like $97 million in Q3 buying back their own stock.
Mm-hmm.
And they still have a big chunk of change left in that $1 billion program they announced.
Right. $903 million, I believe.
Yeah, something like that. So what's interesting here is the timing. They initiated this buyback program fairly recently.
Mm-hmm.
And it just happens to coincide with a period where their stock price has been, well, let's just say it's had its ups and downs.
It's been a bit volatile, yeah.
You're being very diplomatic. It's been more like a roller coaster, hasn't it?
Yeah.
So is this a classic case of a company trying to, pump up its stock price when it's feeling the heat a little bit?
Well, it's definitely possible. Share repurchases can create a sort of temporary surge in demand.
Right.
Which can, give the price a bump in the short term.
Mm-hmm.
But it's rarely that simple. Companies also use buybacks as a way to return value to shareholders when they believe the market is undervaluing their stock.
So it's like they're saying, hey, we think our stock is a bargain right now, so we're gonna grab some ourselves.
Yeah, exactly. And by reducing the number of shares out there, they can potentially boost earnings per share, which can make the stock look more attractive to investors.
It's like, slicing a pizza into fewer slices, but each slice is bigger, more satisfying.
Perfect analogy.
And for Robinhood, it's especially relevant given their focus on, driving higher earnings and free cash flow per share over the long term. This buyback program could be a way to kind of accelerate that process.
Right.
But here's the $1 million question. Is it the smartest move? I mean, they could be putting that money into new products.
Yeah.
International expansion, all those exciting growth initiatives we talked about.
This is a really important point about capital allocation. It's all about finding the right balance.
Mm-hmm.
Companies have to weigh the potential returns from investing in growth versus, giving back to shareholders. And in Robinhood's case, it seems like they're trying to do a bit of both.
It's like deciding whether to, buy more ingredients to expand your pizza business or share some of the profits with your investors.
Yeah, exactly. And ultimately, the success of their decision really hinges on whether this buyback strategy works. Does it give their stock price a lasting boost? Does it increase earnings per share significantly? Time will tell.
Time will tell. Well, I guess that's the exciting part, right? Trying to predict the future, analyzing all the data, making those informed decisions.
Absolutely. And as with any investment, there are risks. There's potential reward. The key is to, understand those risks, assess the company's long-term prospects, and make choices that align with your own investment goals.
Great advice. So there you have it. We've crunched the numbers, looked at all those metrics, explored the strategic side of Robinhood's Q3 performance.
Yeah.
We've seen a company that's, experiencing remarkable growth, but also facing some headwinds.
Adapting as they go.
They're innovating, expanding, fighting to kind of solidify their place in a very competitive market.
And that share repurchase program definitely adds another interesting layer to their story.
Yeah, it does.
Yeah.
So what's the takeaway? Is Robinhood a stock to buy, sell, or hold?
Ooh, if we had a crystal ball. But as always, do your own research, look at all the factors we've talked about, make a decision that's right for you.
Wise words. Well, thanks for joining us on this deep dive into Robinhood's Q3 2024 performance. Until next time, happy investing.